Hi there, this is Aubrey Chauke. I'm a tutor for accounting, business studies, EMS, as well as research. If you're watching this channel, you're definitely at the right place. Please don't forget to subscribe to our YouTube channel by clicking that subscribe button on your bottom right. And while you are at it, please click the notification bell so that you can be updated each and every time I'm online or when I've uploaded a lesson. With that being said, please don't forget to like this video so that you can help us with the algorithms, as this helps us to be able to know the kind of videos that you prefer, the people who watch our channels and so forth. And if you have any comment, please leave it on the comment section. And if you want a personalized lesson for you, you can use the details that will follow at the end of this video. With that being said, let's go into the topic of the day. Today in our lesson, we're going to be talking about the accounting equation. This topic is very important because the accounting equation is almost a topic that affects each and everything that we do in accounting. When you were in grade 10, you were introduced to things like income statement, and that has an effect on such. You were also taught about the accounting equation in grade 10. I saw that now the grade 10 learners are even doing the balance sheet, our social. But anyway, it's happening. So it will help you, to understand how the accounting equation works so that you can be able to prepare our financial statements with careful consideration and having paid to attention the transactions that took place and how the accounting equation actually had an influence on those transactions. With that being said, let's just find out what are we supposed to know at the end of this lesson. Firstly, we need to be able to explain the elements of the accounting equations. Secondly, we need to be able to explain how the double entry principle works. And thirdly, we need to record transactions and show their effects in the accounting equation. With that being said, before we go into the activity that we're supposed to do, I'm just going to briefly take us through the theory part so that we can be able to understand what we are supposed to do when we deal with those transactions. With that being said, let's continue with the lesson. Now, one thing that we need to talk about is the accounting equation. An accounting equation is a scientific formula, and it says that assets is equals to, or it's a mathematical formula. It says that assets is equals to owner's equity plus liabilities. This means that our total assets, when we have added all of them, they should be equivalent to when we add our owner's equity plus all our liabilities. So, for example, if our assets are 1,000 and our owner's equity is 300, our liabilities are supposed to be 700, so that when we add all of them, it's 100 both sides. Remember, in an equation, both sides are supposed to be equal. Okay, and then we need to also understand the elements that are involved in the accounting equation, which makes us to be in a situation where we have to talk about the assets. Okay, which is one of the first elements that we're going to discuss. Assets are the possessions of the business. These are the things that we own, and we have two kinds of assets, and this include non-current assets and current assets. I'm going to briefly describe the difference between the two types of assets as we proceed with the lesson. But for now, what we need to know is we know that the assets are known as the possessions of the business. This means these are the things that we own, and like I said, that these assets are divided into two categories, which is the non-current and the current assets. So you need to be able to explain this type of concepts. You need to have an idea in terms of how do these concepts work in a business sense, and then you also need to be able to know where do these assets that I have increase or decrease. Okay, and then with that being said, we know that according to the accounting principles, we are told that our assets increase on the debit side. Okay, and this works mostly when you are using the T account. It explains everything clearly. And then on the T account, normally you'll have something like this. Let's say maybe if these are our assets, if you check, you'll have a balance brought down on the debit side, and this is because the assets increase on the debit side. So you need to have this information before you attempt to complete the accounting equation. And the things that increase our assets are when we buy more assets. Like for example, in the business, we can buy things like vehicle, we can buy things like land and building and so forth, okay, equipment and so forth. And we are also told that the assets decrease on the credit side. They decrease on the credit side. This means that the only time these assets can decrease is when we are selling them or we're making some donations, or maybe if they get stolen, which I pray that it doesn't happen. Okay. And then we also need to be able to understand the categories of these assets. In terms of this, at least know, remember, non-current assets and current assets are all classified as assets. So as long as you know where they increase and decrease, you won't have a problem. Now we need to be able to differentiate between current assets and non-current assets, which is what I'm going to do with you right now. We are told that non-current assets are the resources that have been with the business for more than a year. Normally, the resources that have been with the business for more than a year, or that will take more than a year to convert into cash, include things like your vehicles, land and buildings. Remember, in terms of business sense, these businesses will buy assets that cost a lot of money, assets that cost around $1 million. So when you want to sell such assets, it will take you a long time. Okay, and this is why we call them non-current assets, because it will take you more time to convert them into cash. And then example of non-current assets, like I said, include things like vehicles, your land and buildings, and your equipment. Okay, just remember that in terms of non-current assets, they have to be greater than a year. Okay, so once you have this in mind, you are sorted now. And then we have current assets. Current assets, we're talking about those kind of possessions that we can convert into cash, or they've been with the business for a period of 12 months or less. Like things like your inventory, for example, you can convert them into cash within a period that is around 12 months. You can sell your inventory in a month, or in 2 months, or 6 months, and so forth. So this is why they fall under current assets. Your things like your money in the bank, the petty cash, and so forth, you can convert them into cash within a short period of time. Your money in the bank, remember, you just have to go to the bank and withdraw. If you have an investment, depending whether it's a fixed deposit or a savings account, if it's a savings account, you'll probably have to put in a notice, maybe a 30 days notice, for example, and then you'll access your cash. So this shows that we can convert this into cash within a period that's less than 12 months, and which is why we have them under current assets. Okay, and we also have liabilities. When we talk about liabilities, we are talking about the debts or obligations of the business. And in this kind of obligations, we have two types. We have the non-current and then the current liabilities. Non-current liabilities, they have to be greater than 12 months, meaning that it will take us more than 12 months to settle those liabilities. And in terms of current liabilities, it's less than or equals to 12 months. Remember, like I said, that you can settle them in 12 months or within 12 months. They will give you up to 1 year to settle all this. That's like, for example, in terms of your short-term loan, they will give you something like 6 months for you to be able to settle that loan. So this is why it makes sense for short-term loan to fall under current liabilities. Okay, and then we also need to be able to understand where does liabilities increase. And from the information, we are told that the liabilities increase on the credit side. If you check on the trial balance, you will realize that things like your loan, things like your creditors control, they are on the creditors side, on the credit side on the balance sheet. Okay, on the trial balance, and this tells you that these things are they are liabilities. So liabilities have a credit balance, meaning that they increase on the credit side and then they decrease on the debit side. Like, for example, when you make a payment, your liabilities will decrease. Okay, things like your loan, for example, if you check it on the trial balance, look at it carefully, you will see that your loan is on the credit side, the balance is on the credit side. Things like your creditors control, they are on the credit side. And this is because when you look at a T account, if they ask you to write a T account, if you are opening balances for liabilities, your balance will be on the credit side. So if the balance brought down, will be this side, on the credit side. And remember, liabilities are opposites of assets. Okay, and we have covered that now, so we're just gonna continue. And then remember, I've spoken about these things, like, for example, in terms of non-current liabilities, you know that it includes things like your long-term loan, your mortgage bonds, and so forth. And in terms of your current liabilities, we spoke about it being the obligations that must be settled within or in 12 months, like for example short-term loan or shareholders for dividends. There are so many that you have to settle within 12 months. So we've touched on that. I believe that now we are fine. So all you need to do is to understand where does this element increase and decrease. When you know that, you are sorted. And then from there, the next thing that we need to talk about is known as the owner's equity section. The owner's equity section speaks about the net worth of the business. If this person was to sell this particular business, they will sell it at this value of the owner's equity. Okay. And then this is made up of about, I think it's about 4 accounts that mostly affect the owner's equity section. And this includes your income, expenses, your drawings, and capital. In terms of income, think about the revenue that we get from selling our products or from rendering services. And then in terms of expenses, look at the cost that we incur in running our business. Like for example, things like your salaries and wages to pay your employees, they are part of your expenses. And in terms of drawings, we are talking about when you take money out of the business for personal use. So you need to be able to understand in which side do these accounts that I've mentioned decrease and increase. Okay, so now in terms of the owner's equity, if it's like this, maybe let's say on the debit side, the things that will affect the debit side and the things that will affect the credit side for owner's equity, you need to think about this. I'll just write them. You will have your drawings here, and then you will also have your expenses this side. So this means if the owner's equity, we are saying they're gonna debit the owner's equity, this means they reduce it. Remember, the more you pay for expenses, the more money goes out of the business, the more your net worth is reduced. Okay. And then the owner's equity also gets increased on the credit side, and it can be increased by things like your income when you are selling, your income, and also your capital contributions. Okay, so this is the credit side, and then this is the side where this thing increase, like I indicated with a plus here, and then this is the side where this thing decreases. So when you do the accounting equation, you need to put all this into consideration. And once you understand this, these are the fundamentals of the accounting equation. Once you understand these things, you are sorted. And remember to read all those notes. Remember, I told you that the owner's equity will increase on the credit side and then decrease on the debit side, which is what I've mentioned when I was drawing the T account. So you just need to be able to summarize these things for yourself so that you can be able to move the transactions. So with that being said, we're going to go through the transactions that we're supposed to do and record them in the accounting equation. So what we're going to do, we are going to identify those particular accounts that are affected, and we'll also show how those accounts are affected on those elements of the accounting equation, and we'll also use amounts to show this effect. Okay, so we're going to go through the transactions and just try to record them as quickly as possible. They're saying Chauke Tutorials is a business that offers online lessons to grade 10 to 12 learners in South Africa. The following are the transactions that occur during the month. So in this case, I decided to use myself as the owner of Chauke Tutorials. I decided to use this business because, hey, I can't be talking about someone's business. Let me talk about mine so that you can be able to relate. So this business that I'm running, Chauke Tutorials, offers online lessons. I've decided to just talk about accounting in this case because we are teaching accounting right now. So this business offers online lessons as for accounting as its main core activity. The other ones are just additionals. Okay, and with all this being said, we're going to look at the transactions that occurred at Chauke Tutorials for the month or during the month of March 2021. One of the things that you need to be able to pay attention to when you deal with the accounting equation is that you must keep in mind the period in which these transactions are occurring or are happening, and this will help you a lot. And they're saying that read the following transactions that occurred during the month of March 2021 and then show their effects on the accounting equation. So when you deal with such things, just make sure that you read all the questions fully. One of my favorite mentors uses this acronym. I think it's read the full question. Yes, RTFQ. This is one of the principles that Ashraf Patel likes to emphasize, that when you do a question, you must read the full question. This helps you to be able to understand. You don't want to just read the question partially and then want to complete. You'll end up doing some mistakes. So each and every time when you deal with a transaction, just make sure that you read the questions as clearly as possible. Don't attempt any question without understanding what you are required to do. Okay, with that being said, let's look at the structure of the accounting equation, just so that you can be able to understand some things that we spoke about. Remember, I said that when you do an accounting equation, one of the things that you need to pay attention to is to always tell us what is the business that you're preparing the accounting equation for. What is the name of that particular business? We want to know. You can't just say accounting equation and just write the month and keep quiet. You need to tell us which business are you preparing the accounting equation for, and then for which month. So we must know the name of the business, and then you must also show us the period in which you are preparing this accounting equation for. Okay, now let's go into the transactions and just be able to record them. Now I think before we look at the transactions, let's just look at the structure of an accounting equation so that we can know how does it look like and so forth. But I want to warn you that sometimes they may not show you this side where I've shown you account debited and account credited. So you always need to know which account is debited and which account is credited. And this brings us to having to talk about the double entry principle. Okay, remember when I was going through the things that we're supposed to know, I also mentioned that we should be able to explain how the double entry principle works, and this is why we need to look at it. So what the double entry principle simply says to you is that principle. Okay, what the double entry principle says to you is that for each and every debit entry, debit entry that you make, let me just erase so that it can be clear. So what this principle says to you is that for each and every entry that you debit entry, for each and every debit entry, there must be a corresponding credit entry. Okay, like for example, let's say maybe if we've paid water and electricity paying cash or through the bank, there are two accounts that will be affected. The first one is that I will debit water and electricity, and then because I've debited a particular account, there's an account that I need to credit, and then the account that I'm going to credit is the bank. I'm going to credit the bank. Okay, so what I've done is that for each and every debit entry, I have a corresponding credit entry, and that's what the double entry principle wants you to do. If you are saying something must be debited, there has to be another account that will be credited, which is why I'm saying that you need to understand the accounting equation when you do all these things. Okay, let's now go into the transactions. I'm going to be quick. Should you need me to explain something for you, leave your comments there, and then if you want a personalized session, you can tell me and then we can make some arrangements. Okay, so now the first transaction says remember, when you record transactions, they occur at a particular date, so it's very important for you to pay attention to the date that you're given. So they're saying that on 15 March 2021, the owner Aubrey Chauke contributed capital of 10,000 by depositing the funds directly into the bank account of the business. So this person, me myself as Aubrey Chauke, I decided to invest some money in the business, and I invested a sum of 10,000. When I started Chauke tutorials, I invested that money. I invested that money as part of my capital contributions. So when you identify this transaction, such as the first thing you need to do is ask yourself which accounts are affected. For me personally, I'm already seeing that the capital account has to be affected, and also the bank account, because remember, when I put money in the business's account, the capital account is affected, the bank account is affected. So now you need to think about this and ask yourself which account is debited and which account is credited. One has to be debited and the other has to be credited. Okay, so now we're going to go into the accounting equation, and then remember that this occurred on the, I think it's on the 15th of March. So you can just write the day 15. So the account that's going to be debited is going to be the bank. Remember, we are putting money in the bank account of the business. So the account that's going to be debited is going to be the bank account, and then the account that's going to be credited is your capital account. Capital. Okay, and then now in some questions they might ask you to firstly name the accounts on the elements and then show the effect. Like for example, if I said that bank is going to increase, they might ask me to show on that particular element the account that's going to be affected, and then as well as the amount that this account will be affected by. But in order for you to be safe, I'll just show you, I will move this, I will write the account in that particular element and also show the impact of the funds in that account. Okay, so now we are told, we have identified that the bank account will have to be debited, and then the account to be credited has to be capital. So we need to come here and ask ourselves, where does all these accounts fall within this trade? For me personally, I know that the bank account, it's an asset, because remember, this is my money, it belongs to me, I own it. So this is why I'll have my bank being debited. And you can just say to show the effect, just say plus bank. Okay, and then you can show the effect of the money by saying plus 10,000. Okay, and then you are done. You have showed the effects on this first element, and then you are only left with what we call the credit entry. You've done the debit entry, you just have to do the credit entry. Okay, so remember we said it's plus 10,000 here. So we need to ask ourselves which element here is affected by the accounting, by capital contribution. And we know it can be liabilities, because liabilities are the debt of the business. So we only left with owner's equity, and we understand that the owner's equity, it is the net worth of the business. So the more you as an owner put money in the business, the more your net worth increases. So this means that I'm going to increase capital. So it's going to be plus capital. Capital increases the owner's equity, and then we'll have plus 10,000. Then you are done with this transaction. The marker will just give you the mark for this, what I've done. Remember this one. Remember I said that capital increases on the credit side, right? I said capital increases on the credit side. So if capital is increasing, if owner's equity is increasing, it means I'll have a plus. That's why here the account credited is capital on the owner's equity section, which is why we have a plus here. And then remember, in terms of the bank account, when somebody puts the money in the business's account, the funds increase. So in this case, it's the owner who put that money. This has increased the bank account of the business. Okay, if you have any question, don't forget to tell me. Leave your comment so that I can be able to attend to your question. Let's now go into the second transaction. So we've already dealt with this one, we are done. Okay, Now I think I need to look to maybe try to use a different pen just so that you don't get confused. Let's go into the next question. They're saying on the 19th of March, the business rendered tutorial services for cash, meaning that there was some money that we were given, and they're saying we rendered those tutorial services to cash to clients, for cash to clients at a selling price of 2,000, meaning that at the end of the day we charged these clients the money that we got from offering tutorials amounted to 2,000. So think about this. If I'm rendering a service to someone, which accounts are affected? And already from this, the moment they tell me about cash, I'm thinking about my bank account. And then the moment that they tell me about services rendered, I'm thinking about owner's equity increasing. Okay, so on the 19th, I'm gonna skip a line just so that these things don't get messed up. So on the 19th, already I know that my bank account will increase because I'm receiving money for the services that I've offered to my clients. Okay, and then the account that will be credited as services rendered. Now we need to ask ourselves, okay, where do these accounts fall? And like I said, that like sometimes some examiners, they will only ask you to show the account debited, account credited, and then not ask you to write that particular account on the element. They'll just want you to show the amounts. But sometimes they might not actually give you this account debited, account credited. They will want you to show it like this, and then maybe this part where there's account debited and account credited will not be there. So I'm doing this just so that you can be able to know both ways. They won't ask you to do it like this in these two ways. They will choose one way, either you showing the effect on the element plus the effect of the account affected, and then also the amount that affects that particular element. That's it. Okay, now remember we said we rendered a service to someone, right? We rendered a service to someone, and when you've rendered a service to someone, it means that once they pay us, we receive some cash. This is an income for the business, and if we are receiving some cash, it means that our bank account is increased. Okay, so we're going to have plus bank here, and then the amount that our bank account is increasing by is 2,000, which is why we would have 2,000 here. And then now we need to think about the next element that is affected. Our next element is services rendered. Services rendered increases our owner's equity. The net worth of the business increase. So here it means we're going to say plus services rendered, and then we say plus 2,000. Okay, I have enough space, so which is why I've decided to just write this below this. The most important thing is that I've shown the amount and the accounts that are affected, and so far you are done. We are done with the second transaction. We've recorded, we've shown also the effects, we've also applied the double entry principle. Now on this one, the next one, you need to be very careful. It's quite tricky, this one, because there are 4 accounts that are affected, and I've seen most learners when they do when they do such things, such transactions where there are 4 accounts, they only show 2. I don't know why, whether is it a disease or what's happening, but let's leave that and continue this. So I'm gonna start with the first part. Okay, they're saying on the 25th of March 2021 we sold promotional golf t-shirts for 1.5. They didn't tell us exactly how many t-shirts we sold, but all we know is that from the sales of such t-shirts we made 1.5, and then the cost price of producing those t-shirts was around 750. Okay, so we need to show the effect of the sales first. If we sell, what accounts are affected? And from here, notice something, they didn't tell us whether we sold for cash or credit. But if they don't mention anything, we know that it's for cash. Okay, remember, mostly businesses sell for cash. Okay, and because I'm the owner, I'm telling you, I sold these promotional t-shirts for cash, no credit. Okay? So you need to be able to record such things. Even when they tell you that the transaction is recorded in credit, you need to be able to know how do you record that. And that, obviously that one will be a bit different from when you record when you have sold for cash. Okay, so now let's record the first part of the transaction. I think it's 25 March. I have to use a different pen again. Let me can use black. Maybe let me see how colorful this green is here. I think it's fine. So on the 25th of March, we're going to have the 25th of March here. I'm gonna skip some few lines so that these things don't get messed up. So now on the 26th of March, they told us that we have sold some promotional t-shirts, and when we sell promotional t-shirts, because it is for cash, we are getting money coming into the business's bank account. And even if these people, they give us cash at the premises, at the end of the day, we will take that money and deposit it to the bank account of the business, which is why we're saying that the bank will be debited. So we're going to debit bank, and here we would credit sales. Okay, and then they're saying that the amount is around 1.5. Okay, so we know that each and every time when we sell things, we get money, right? So here it's going to be plus bank. We are saying that our bank account is increasing, and it's increasing by 1,500. These people have bought t-shirts from you, and when you take that money that you've earned from the sales of t-shirts and deposit into the bank account increases, the balance increases. Okay, and then from there we'll also have to show the effects on the owner's equity. Remember, the owner's equity increases when you make some sales, the owner's equity increase. Okay, so we're going to have plus sales as part of the owner's equity, so it's going to be plus sales. What I'm indicating is that our sales are increasing, and then they're increasing by 1.5. That's how you complete an accounting equation. And then now remember, I spoke about two accounts being affected here. Two accounts being affected. We also have to show the effect that affect the cost price as well as the inventory, because remember, we are selling some things. Okay, so in this case, because we have sold, the account that gets to be debited is cost of sales. I will explain why. Remember, cost of sales means cost of goods sold, right? So if cost of goods sold increases, your net worth as a business owner reduces, which is why the owner's equity will be debited. If it's debited, it means we're going to reduce it. Okay, so cost of sales affects the owner's equity section, and then in this case we are also talking about another account. Remember, when you sell stock, your inventory gets reduced, so we're going to debit the inventory. The stock that you had in the storeroom is no longer the same as before you sold, so which is why we're saying inventory account will be credited, and an inventory account is an asset. So if inventory is credited, I know that my assets will be reduced, so I'm going to say minus inventory to show that the inventory account is reduced, and I'm gonna have minus, I think it's, can't remember if it's 750. Yes, cost price 750. So our inventory is reduced by the value of 750. Okay, and now we need to show the effects also on the accounting equation. So in this case, the account that reduces our owner's equity is minus cost of sales. Let me just write here. Remember, there's this one element, and then this is gonna be minus 750. Okay, I don't have enough space, so that's why I wrote this is underneath this. And obviously here the spaces are mean and in loop, so I can't just try to put everything adjusted. Okay, so we've already shown the effects. If you want to see that you are correct, like I'm gonna use one example to show you. Remember we said that the owner's equity formula says assets is equals to owner's equity plus liabilities. If you check here, our assets total is 10,000, and if you take our owner's equity and add to liabilities, you also get 10,000. So this means that our equation is right. And then here I think we'll deal with the last transaction. They say okay, I thought I missed the second question, but it's fine. They're saying on the 28th of March we received a loan from Absa Bank amounting to 5,000 to boost our operations. Obviously, as a business, there might be some time where you need to make some borrowings just so that you can it can assist with the running of the business. And this is the case where we are in. We have borrowed some funds, and it's very important that we boost our operations. So we're going to record that transaction. They say received a loan from Absa amounting to 5,000 to boost operations. So I can already see here that there are accounts that are affected. I can already see that in this case the loan account is affected, and then also the bank account is affected. Remember, when I receive money, the money is given to me as cash or deposited into my account. Okay, how about what you mentioned about fire on and then you receive that money. So every time we receive money, it's recorded in the CRJ, and then from the CRJ, once we are done at the end of the day, we deposit into the bank. But in this case, remember, your bank borrows you some money, so it means that they directly deposited the money into your bank account. So you just have to go and record in the CRJ to update your books. And then also in this case, we're just going to show the effects on the accounting equation. In this case, we received money on the 28th. I'll go back to use red. Okay, so I'm gonna write the 28th here. So day as the 28th, and then the account that is debited is the bank. Remember, bank as your asset is increasing because the bank is giving you some cash. And then the account that is credited is loan. That's the loan account. So my bank is being increased, okay, because I'm getting some money for the loan that I borrowed. They're giving me money. I borrowed money from them, so it's gonna be plus 5,000 in our assets, plus 5,000, and then from there we'll have to show the effects in the liability section. So the account that will increase is the loan account, okay. And then loan account, the loan is part, if you check under liabilities, one of the things that you have, that's loan. And then the loan account will increase our liabilities by 5,000. We have received 5,000 from the bank, and this is how you complete the accounting equation. If you check, we've went through all the accounts or all the transactions that occurred, and I've shown you how everything it's supposed to be recorded. So should you have any question on this accounting equation, or should you want your own personalized lesson, as I indicated before, use the details that will be displayed at the end of this lesson. You can either choose to contact us through our website, or you can even use their WhatsApp numbers, or simply send a text, or on Facebook, or an SMS, whatever option that works for you. I'll be able to respond to your inquiry or inquiry. So yeah. With that being said, we've reached the end of our lesson, and in this lesson we have covered we were able to explain the elements of the accounting equation. We also explained how the double entry principle works. If you come here and check, I showed you that for each and every debit entry there is a corresponding credit entry. For example, here I've debited bank, the corresponding credit entry is the capital account. So we've applied the double entry principle, and I've also explained to you how it functions. And then we have also dealt with we explained the elements of the accounting equation. Like I said before, I explained to you all those assets, honest equity, liabilities, and so forth. I explained to you what they meant. So we've achieved the goal of our lesson, and we're also able to record the transactions and show their effects on the accounting equation, which is what we ended up doing at the end. If you can check here, we've recorded those transactions. We've showed that some are increasing the assets, some are reducing them, some are increasing honest equity, some are reducing honest equity, and some are increasing the liabilities part. So we have shown the effects of the account of those transactions on the accounting equation. With that being said, ladies and gentlemen, we've reached the end of our lesson. And just before I go, I just want to remind you to click that subscribe button on your bottom right if you're watching this on YouTube, or if you're watching this from your phone, you can search for our YouTube channel, Aubrey Chauke, and then click that subscribe button as well as the notification bell so that you can be updated each and every time when I'm online or I've uploaded a video. And you can also leave your comment after watching this, just so that I can get to know how you felt about this lesson. Let me know if it was productive for you. Were you able to understand? And you can also send me some recommendations so that I can be able to improve. Remember, no one is perfect, and this is Aubrey Chauke, your favorite accounting teacher, your EMS, your business studies research, your tutor. So if you have anything that you want me to help you with, please, I beg you, use the details that will be displayed. And like I said, once you're done watching this, click that like button. You know that this lesson has been beneficial for you. So please help us with the algorithm so that I can get to understand the kind of videos that you prefer. Okay, with that being said, have a blessed night. I kept on referring to the date, saying today, but then I started to record this during the afternoon, so I'm not bad in English, but it's fine. Please, thank you so much for watching, and to everybody who have subscribed to our YouTube channel, thank you so much for subscribing. Please kindly ask your friends, your family, and loved ones to also subscribe. Let them be part of your academic journey so that we can help you to improve your grades. Thank you so much, guys, for watching. God bless you. Have a blessed night. Stay blessed.